guys capture more business in 2023. You know, I'm not here on bended knee asking for the business that you're already generating. What I want to do is kind of fill the gaps on what some other lenders may not have and give you the opportunity to grow your business. By the end of my presentation, I hope that I've answered one very important question to me is, how can I help you grow your business? And I think there's 3 ways that Citizens Bank can do that for you. What I want to do is give you more products so you can get more clients. As a retail lender, we have the ability to lend out on our own portfolio. What that is we're going to use our own money to help your clients that may be looking at a unique property or maybe in a unique situation still be able to buy that loan. That portfolio service allows us to offer adjustable rates. Right now we reprice our 15-1 ARM, and that is still in the 5%. That ARM can be used for investment properties, owner-occupied, second homes. We also offer land loans and construction loans. So that product's been built out to be competitive with First Internet's Bank. You know, not a lot of lenders are doing land-only purchases. We want to do that unique stuff to kind of, again, separate ourselves from just always having to ask for your conventional business. We have Fannie Mae, we have USDA, we have FHA, and in a pinch, we've worked with 4 other brokers. So we want to be the bank to problem solve, to get your clients into a house, and we want to, again, be a creative lending specialist for you guys. The next thing that I want to help do is I want to take the stress out of processing. I want to give you guys more time to work on your sphere, prospecting clients, rather than having to worry about, does Jimmy have his financials in? Is this pre-approval good, or is it just a pre-qual and I've got to wait for underwriting to come back and tell me what else is wrong? The great thing about Citizens Bank is our entire mortgage department is under one roof in Avon, Indiana. So that gives me quicker access to, again, problem solve, to work directly with my underwriters to say, it may not work here, can we do it through our portfolio? Can we take it to one of our brokers, can we get it done? We also retain 100% servicing on all of our conventional portfolio loans. You know, I think the pandemic opened up a lot of people's eyes that they wanted to be treated like people again, and not necessarily like a transaction. So that's a good value for you if you've got a client that wants that hand-in-hand work and be able to call me after the fact. Because we like being able to offer that extra service to our clients. And most importantly, what I think is I get to work in tandem with my processing team. You know, they are great at what they do. I love them, but it's not their job to make your clients happy. So I'm not a lender that's just going to pass it off and let the processors do the thing. I want to be able to consistently communicate to you guys so you know what's going on, so you don't have to guess. You know, if you ever have to call me and say, hey Josh, where's this loan at? I'm not doing my job the right way. You know, I can set you up on text message notifications so you get a text every time it progresses through to another milestone. I'm going to text you or call you every Monday and Friday. And worst case, if I take you out for a drink, I'll spill the beans on what's going on then too. Lastly, we're going to help you grow a business by being equal partners with you. You know, the one thing that we won't do is we're not going to pay for facilities because that doesn't build a relationship. I think that builds a dependency where you feel like you're almost obligated to refer that person who may not be a good fit for your client. I'm going to do the other stuff. You know, I want to be able to provide you referrals. You know, as a retail bank, I get walking clients from all over the city. You know, Citizens Bank has been in business since 1931. Our corporate headquarters is still in Mooresville, and we have 10 offices in Johnson, Morgan, Hendricks County. We are aggressively expanding. That's why they brought me in to help grow their exposure here in Marion County. I live up in Fishers. So I'm in downtown Livermore, Hancock, Hamilton, Northside, Boone. I'm going everywhere to try to get as much business as I can. The other thing that I want to do, which I think builds more relationships, is help you out with the small stuff. You know, help with your marketing. If you need to buy for sale signs or open house signs, give me a call. If you want a picture, or if you want your face on a t-shirt to hand out to your clients, give me a call. You know, if you want to join the market on social media, I'm all about that as well. And most importantly is, I want to help you build your clients. You know, is that catering an open house? You know, is that doing an education where you sit down and do a TikTok or a Facebook where you tell a first-time buyer what they need to do to get started? Educate someone on how they can get into investment banking. You know, I want to do that thing as well. And also volunteering and donating. That's very much a part of our culture. We want to be a good steward for the communities that we serve, so they encourage us to get out and participate with what you've got going on. You know, if you're doing a fundraiser, a food drive or something, give me a call. I will definitely contribute. I will blast it out, and I'll get as many eyes on it as possible. So before I let you guys, or before I kind of stop, you know, I want you all to take out your phones and scan that QR code. That's got my contact information, so you can just upload me as a contact in your phone right away. It's got my email, it's got my phone, it's got my fax. We still have fax if you need it. And I want to, again, be accessible to everyone. You know, I want to help you guys. If you have questions, you know, I love first-time buyers. I love answering questions. I love just, again, getting in front of as many people as I possibly can.
I can share it too later.
Yeah.
It's a little far.
And on your tables, those folders have all my program guidelines or program information. Some of them are not updated because we've recently just built out some products. The first responders, the relocation, for anyone that's got clients working with production builders, we just rolled out a 180-day lock while the house is under construction. So if someone's looking at a pre-sale, we can lock that right in. And especially with those arms, it gives your clients the ability to regain their purchasing power. You know, being in the 5s or fixed or in the 6s, again, that's a lot of money to leave on your client's table. So, well, I still got a few minutes. Does anyone have any quick questions? You know, I'm going to stick around after the meeting and just kind of hobnob and eat some lunch myself.
So you said that the 5%, was that just 15-year-old?
No, the 5, on our portfolio, we can get people approved with as little as 5% down.
That's conventional.
Yeah. Again, it's a conventional loan. It can be that 7-1, 10-1, or 15-1 arm. Again, it can be used for any property. You know, the investment loans right now are running at, I think, 6.5 to 6.75 is what they came in yesterday.
I was wondering if you could get the 30-day or 30-year option.
Yeah, it's a 30-year term, but it's a 15-1 arm. So it's,
Okay.
it's fixed for that first 15. Yeah.
Can you talk more about your land loan?
Yeah, so the land loan, we have 2 different products that you can offer to your clients. If you've got someone that bought a house and has a lot that came open next door that they don't want to see go and be built up on, that's going to be a 15-year term. That's a 10-1 arm. If someone comes to you and I want to build a house, but they don't want to lose the lot today, we've got a 15-year fixed term that's amortized over 30 years. So it doesn't hit their financials hard, they can still go out and live their life, not having to pay that full mortgage. For less than 10 acres, they need 20% down. Over 10 acres, they need 30% down. And that's just because we're not going to put MI on the payment. And then with that land loan, it can automatically roll into construction. The equity that they use to buy the land can be counted towards their construction down payment. And then that equity can get rolled into permanent financing. Because we have 1- and 2-time construction closes. Again, those are all portfolio options, and again, I think are pretty strong for where the market is right now.
So is there a limit how long I can hold the land loan before I can build?
Nope. As long as they say, I think I'm gonna build in the next 15 years, I'm gonna give them that 15-year fix. Now, if it comes out and it's a mountain and there's literally no chance that we're ever gonna build, then we'll go with that 10-1 variable rate loan.
What are the rates on the land loans typically right now?
The land-only loans are running at about 7%.
Okay.
The one, and I will say this, because we price our arms so aggressively in our portfolio products, there's no buy down. So it's free to the clients, they're not paying anything. But the beauty part is we want your business. So if a client's coming back and like, hey, I love this, I just need a little bit of help, give me a call, talk to me about it, and with underwriting, being in-house, I was like, can we get an extra quarter, can we get an eighth, to again get that yes. Anyone else have anything that I can answer for you right now? Awesome. Well, I'll be hanging out again for a little bit after the meeting. Enjoy it. I appreciate your time, you guys, and I hope to talk to some of you soon.
Thank you. Good job.
Okay, we've got one more. Mark wants to speak to you just really quick on something really quick before we get to our featured speaker, Becky. But I want to take a minute, and she doesn't know I'm going to do this, and make one introduction. Sorry, Haley. If you haven't already met Haley Mullen, she is our new Director of Agent Community. She started with us in January, and she's she's now in charge of all of our events, and so if you can take a minute to introduce yourself to her at some point today or when you see her in the future, that would be fabulous. Mark, take it away.
Everybody give me on a scale of 1 to 10. Just give me like this with your fingers. How's your experience been so far with Connect VLC?
Is 10 good or 10 bad?
10 is great. And I'm looking at Jenny Bliss, expecting her to do this. Jenny's giving it 2 out of 10. Okay, I have somewhere between, I'm getting 1 to 8 as the range. I'm getting a lot in the 4 to 6 range, which is about what I anticipated. I wanted to hit on it a little bit today, and I say a little bit intentionally because I know, like, obviously our VLC is critical to our day-to-day work. Amongst any platform that we use, it's probably the one that is the most critical to what we do, and so any delay or compromise of that system has a big impact on us as realtors. And so we could spend a lot of time. We could do Q&A. We could actually, as a brokerage, attempt to train on the system. And I just, so that you know, we've actually had, as a staff, some significant internal dialogue about, like, how can we best help you and add value in the middle of the transition to VLC. And if we believed that our ability to answer your questions and train you was truly helpful, we would do that. But I need to be honest and say that isn't how this works. It's just not. But I want to address a couple things that maybe are helpful in terms of your mindset, but also in terms of, like, what we're trying to do. So I had an email exchange going with Shelly, the CEO of MyBor, about scheduling another training where it's just our brokerage. And I make no guarantees in terms of how effective that is. A couple of you, I think, have attended. MyBor is now having the vendor so we buy that VLC. As a trade organization, we're buying that VLC. We've been using the same vendor for roughly 10 years, right? So shortly after I came into this industry, we changed vendors. That's how long we've been on Matrix. That contract is now done. We have a new vendor. So in a way, MyBor is training on it, but what they've now done is I think they're leaning on the vendor to say, okay, you need to provide training. So that's happening. But those classes, from what I've heard, I haven't attended any of them in person or virtually. I don't know that they're going great. They're getting overwhelmed in terms of, like, people can't get a spot in them. The Q&As aren't going well. So I think if you can and want to go to them, I would encourage you to do it, because I don't think you're going to walk away with 0. But I think we're better off to get a little bit more controlled environment where it's just us. And hopefully my request is someone from MyBor and someone from the vendor. Because I think that's one of the things that they've realized in those classes is that the person doing the training doesn't really have any local connection. They're not an Indianapolis person. So what's particular to our marketplace and happening here isn't on their radar. So we're working on that. But I wanted to share just a little bit about perspective on the why behind the change, but also where I think it's going, but also to acknowledge, like, where it is today. And these are all just my opinions that no one has to agree with, but maybe you'll find this helpful. The premise of the change was not that Matrix was broken. I've seen a lot of communication from agents, and I totally get this. We have a system that we've been using for 10 years that people generally weren't complaining about, that did its job, that we were all very used to. Why make a change? There's a couple key factors in that, and I meant to say this. A couple of you know this is comical timing. I just transitioned off of the board of directors for my board. And kind of funny timing, the board of directors made a final approval for this change at the end of 2021, and then pulled the trigger on the final implementation of the change in January of 23, which means in my 1-year term on the board of directors, actually was right in between the making of the decision and the implementation, which I'm now very grateful for, to be perfectly honest with you. But I just want you to know, like, I wasn't, in the words of Hamilton, I was not in the room where it happened, deciding to make this change. So I don't have a dog in that fight. I'm not trying to defend a decision that I was a part of. I'm just trying to do my best to say, look, I think it's helpful for you to understand a little bit of the why. So it wasn't that Matrix was broken. It was two, I think, critical things about the vendor that was providing Matrix that my board, our trade organization, decided were not in our best interest. One was that we didn't have control of the data. The way that that vendor had the contract set up, they had the right, and they were exercising the right, to profit from the data outside of our board's control. That hadn't led to a massive problem, but I think everyone now realizes how valuable that data is over the course of that 10 years. Think about what happened in our industry over that decade. What's the one big thing that comes to mind regarding the value of that data? What company exploded in value over those 10 years? Zillow. So it's a good illustration of like, okay, this is a hard decision for a local board of realtors to make in terms of how valuable is that to us. That's number one. Number two is, if you want somebody who's smarter than me on this to tell you more about it, I could throw Cam under the bus and say, maybe Cam could do this for you. But essentially the way in which that vendor and Matrix operated was that the system could not be changed in real time. That there was no, like, as the market changed, for example, as new fields in the database became relevant, if something in the industry changed and a new field in the database became relevant, the past vendor did not have or offer the ability to change the system in that light. The vendor that we are with now is built as a real-time flexible database that provides a local board of realtors much more flexibility in creating its own set of fields. Both of those two things are projected values. In other words, they're our board trying to determine, are those things really important for us in the long run? Yes, we don't know exactly what that looks like though. So I will say, from whatever percentage of all of the info that I personally have, I think it was the right decision. And I actually think it was very clear that it was the right decision to change vendors. Period. And the launch has been really bad. And I think that's super unfortunate because I think it has conflated two things. Like, we're human beings. We don't constantly differentiate these two things. When you're engaging in a system, you're not differentiating how much of this frustration is about what's happening in the launch and how much of this is about this tool sucks. Because those are two different things. But in the real time, in the moment, it doesn't really matter. It's either working for you or it's not. The launch hasn't been great. I am expressing my own personal opinion. This is actually not the stance that the CEO or the board is taking, so I want to respect that and say they're disagreeing with me on this. I think we clearly should have run in parallel with Matrix for longer. They're saying it was a poor logic. The vendor that we buy Matrix from didn't offer that possibility, which means the launch was mistimed, right? So like now, as of 3 weeks ago, we did not have the option of extending parallel longer to run both systems. So that was something that like a year and a half ago, we would have had to see coming So that's my opinion, but I hope that as you're dealing with the like legitimate frustration, because I mean something as basic as a listing not showing up in a search that it should show up in, like that's pretty vital to a realtor being able to sell a house, and that's clearly happening. My encouragement would be there's very good reason to think that this vendor will get it right. They have in other marketplaces, and I think the tool will be better from a user experience. I think it will also give more flexibility to the board to make it what it should be 5 years from now and prevent the selling of the data. So I think it's the right call. If we were running in parallel right now with Matrix, I don't think any of you would have the level of frustration that you do legitimately have. So however that helps you set your mindset in terms of it gets there, okay, fine. The transition was kind of blown because of the timing of not being able to run in parallel. That's just my take on it. Any questions on that? It doesn't give you any real like, oh, that means I can use the VLC better today because of what Mark shared. If I had that, I would happily give it to you. Jenny, you have a question. I love that you have, yes, Jenny.
I've been thinking about, it would help my mindset if I knew why they did not meet vendor specifications for spending a year rolling this out. It would help me to be like, oh, that's why.
Yeah.
So not that I have it, it's to ask why that question.
No, Jenny, it's a good question. So the vendor that we're buying Connect from, in their own materials, suggest a longer time of parallel than we had. I think it's a combination of things, Jenny. Number one, again, I'm expressing my opinion. Poor planning on the launch. Number two, CoreLogic not being willing to extend. CoreLogic basically said to MyBor, you can sign a 3-year extension or nothing. And so by the time we made the decision, then we lost a little bit of flexibility. We could have addressed that. So I think those two things. And then 3, I think there is some, this is the CEO and the board is holding to this line, and I get it. We did actually run in parallel and offer testing and pilot, and there was a parallel phase that essentially no one in the marketplace used. So there is a little bit of a like, well, had we run in parallel for a year, what would have happened? Because we ran in parallel for a decent amount of time, and 90% plus of the marketplace never even logged in to the new system. And so it's like, I get it. There's the little bit of defensiveness in saying we tried, and no one took us up on it until they absolutely had to. I think it's a combination of those 3. Yeah. One question. Okay. I wanted to take a chance, since enough of us were going to be in the same room, to give you my own thoughts on that. We'll obviously let me know the moment we can get a date set with hopefully someone from MyBor and someone from the vendor to do something with just us. That's where I think, okay, there could be real problem solving that happens in that. So, thanks.
I just want to add really quickly, I know I've gotten a lot of feedback from a lot of you about the VLC. What I'm hearing though, if you're struggling with response times on calling in, I think what most of you, or what I have heard, is that if you email the help desk, the response time is better. So just a little thing you might check out and try. So thank you for your patience, Becky. We're gonna go get into our featured speaker today now. It's tax time, and I know we're all like, but we invited Becky to be here for a couple reasons. Obviously to talk about what happens with your own taxes this year, but also so that at the beginning of the year, you can be thinking about really good practices to set yourself up for next year so that there's not as much panic that some of us feel this time of year normally. And I asked Becky to also maybe share some pro tips on like secrets to keep your accountant happy with you so you don't get fired by your accountant. So this is Becky's
Does that
water.
happen?
I mean, I don't know, does it? And I'm gonna let her take it away. Thanks, Becky.
I'll have some slides. I don't have any gift cards, so I can't engage you guys. Sorry. You're gonna have to listen to this really dry interaction. But interaction is the key I think anybody who knows me would probably say, I'm not very good at doing this kind of stuff, but having this kind of interaction is much better for me. So that's what I want to engage today. So you can read the slides, but I'd rather we have a discussion about it because you'll find value in that, and I will too. I enjoy taxes. I will tell you that. I've been doing it probably, I don't know, longer than my gray hair would tell you I've been doing it. But I do like it. It's a puzzle to me. It's a pain to you guys. It's a pain to the millions of people who live in the United States of America. The code is very difficult to understand. But that's why I do what I do. We are all unique. You guys do what you do. And so we'll just interact and talk about taxes and see where we go here. So let me get an idea. I think Megan told me that we have a mix of people who are new to this, may already have things set up, may not have things set up so that I kind of know what the room is that I'm talking to. If you're new at this, you understand you're now a business. Have you created anything, any structure around that business? So if you have, just raise your hand so I know, because I kind of know most people here, or a few people here. So most of you guys have actually created a structure around it. So you already know what you're doing with that, and you already know, do you know why you're doing that? Or did your accountant just say, this is what you need to do?
You told me.
Yes, yes, the accountant told me this is what I need to do. Try again. You said hit the arrow. I hit the arrow. Maybe I hit the wrong arrow. Look at that.
Perfect.
So you guys all know what taxes you pay them, right? You pay income tax, right? Too much income tax? Maybe, maybe not. It depends on your structure that you have set up, right? So if your structure is set up in a tax efficient manner, then your income tax side of the whole thing may not be. Do you realize that right now we are in the lowest tax bracket that we've ever had? Is that hard to believe?
All across the board,
When you say all across the board, what do you mean?
at different income levels.
At different income levels, yes ma'am. We are at the lowest. During the 1940s, World War II, how would you have liked to pay 90%? Because that's what it was.
Oh my God.
Actually, back in 2017, just not that long ago, which is really important for you guys to understand, back in 2017, the highest tax bracket was let's just say 40%. It was 39.65%. Let's just say 40%, right? That's the federal, add your 5% state to it, you're close to 50%, okay? That was just in 2017. Now, do you all know what happens in 2025 related to taxes?
A lot of that stuff.
It's gonna get bad.
A lot of that stuff runs out, right?
Exactly. We had a TICJA law. Yes, what's a TICJA law? Tax Cuts and Jobs Act, okay? That was in 2018, where kind of life changed, and we were supposed to go from this 5-page tax return to this postcard. If all of you guys remember that. But that is when they created the TICJA Act, which goes from 2018 to 2025. What happens in 2025? We revert everything back to 2017, which means what happens to taxes? They increase, okay? So if you're not planning for that, those are the kind of things that's income tax. Those are all income tax items. So self-employment, do you know what self-employment is? Some of you probably have self-employment on your tax return. Maybe you don't. If you have tax efficiently structured your business, then you might not. Anybody know if they have self-employment on their tax return? Do you know? No. You have no? No. I love it. I have no idea. So, as if I'm signing a return and you're signing a return, we both should know what's on that tax return. And I will get to it, I have a slide back here, that is a little, it's a little further back. And it talks about penalties. And guess what? You get penalized, but guess who else gets penalized? Me. So I am under a code section that if I'm not giving you the right advice and you get audited and you have a penalty, they will come after me and say, why did you give them that advice? You knew better. Okay? So if I'm signing the return and you're signing the return, and I would say this to your tax CPA, hey guys, I need to know what's on that return. Educate me. You don't need to know tax law. You just need to know if you're paying self-employment. You need to know what your income tax rate is. These are all things on your return. Do you actually look at your return, or do you just sign the 8879 and say mail it off?
There's looking at it and there's remembering it.
Yeah.
Always know, but don't ask me afterwards, because I'm not gonna remember.
That's fair enough. Do you know what your adjusted gross income is on that tax return?
In that moment, I do.
In that moment you do. That's probably the biggest number you probably always want to remember, is what your adjusted gross income number is, right? Because that's before any kind of extra stuff. Standard deduction, itemized deduction, that don't really matter. Your adjusted gross income matters to your federal level and your state level. So you kind of want to know that number year over year over year, because that's going to tell you, am I doing better? Am I doing worse? What am I doing, right? Not asking anybody to know exactly what's on every line, but you should have some idea year over year, am I increasing that number or is that going down, right? You do know, you guys all know, you have your sales, you know what that number is, right? So you should be able to kind of, because I have clients that do this, this is my number up here, so pretty sure this is my number down here. Think you can do that? I think you can. I think you can if you're tax structured properly. So when we talk about self-employment, self-employment is on top of income tax. Self-employment is if you're an LLC, partnership, sole proprietor, okay? What's the percentage of self-employment you pay? Anybody know?
15.3.
Why is it 15? I mean, what, if you were in the context of a W-2 world, what would that mean to you? Trent? Because you kind of know that. Right, because it's FICA and Social Security, right? So if you're in a W-2 world, so has everybody here had a W-2 job at one time in their life, right? You have paid 7.65%, which is 6.2% of FICA and 1.45% of Medicare. And the company has paid that, right, that you work for. They've done the same thing. Self-employed would mean that you are employing yourself, so you have to pay both. So it's 15.3%. It's a pretty significant number, especially when we talk about tax rates. Let's say your average tax rate is 20%. Well, what are you actually paying now? If you pay income tax and self-employment tax, you're paying 35% for federal, 5% for state. Let's not forget, state wants their piece of it. So now you got 30%. It's huge numbers, guys. You know, you're working your butt off out there. We all are. and they're big numbers. So my job usually, when I talk about tax advantage, I'm talking about the self-employment tax. Because that's where I think if you're doing a tax advantage system, you can reduce that 15.3%. Now, can I get rid of it? No. Why? I'll get penalized, you'll get penalized, and it'll all go down the drain, okay? The IRS knows that I'm talking to you about this today. They're probably listening. Turn off your phones. Please turn them off, because I know they're listening to me. They're all trying to figure it all out. But that is kind of what we do. We sit and try to help you be tax advantaged. They'll come along, they'll change the law, we'll figure out the law, we'll find a way around it, they'll change the law, it's ongoing. So that's kind of what we do. The tax advantage, when I'm talking about that, I'm talking about trying to find a way to save that 15.3%, okay? That's all I'm trying to do, is try to figure out that. And then, of course, your other item for small business is payroll tax, which comes into play for tax advantage systems to reduce the self-employment tax. Wait a second, Becky. You just got done telling me that the employer pays this piece, the employee pays this piece. I did. But, and somewhere in here, I probably have it. We'll talk through that, but let me get to there and see if I can show you this. As an S corp, you can employ yourself as a shareholder employee. You employ yourself, you pay yourself a payroll, and you pay yourself a reasonable wage, which is still to be determined. You pay yourself a reasonable wage, which, if you don't have your phones on, or if you have your phones on, I'll whisper. But what you try to do is you pay yourself a wage that's down here. Pay a little bit of FICA and Medicare, and then you take out the money over here called a distribution. That's what you charge, okay? So my goal is to walk a fine line as to what is the reasonable wage. I mean, it's just hard to know, right? It's just really, really hard to know. Who all in here is an S corp? Who's already developed themselves as an S corp? You don't pay self-employment. I'll help you with that. If you're an S corp, you don't pay self-employment.
I'm like, is it just her?
LLC.
Like, I'm like, what's so special about her?
Huh?
I just had a moment.
You're allowed to have a moment. LLC is a limited liability company, and it's great, but you are self-employed. But the good news is you can do something about it. Okay? So, why do you think most people, I mean, you probably talked to people in the room and said, well, here's what you do, right? Somebody tell, this is what you do. Do you know why you do that? Or do you just do it because somebody told you, or your tax accountant told you this is what you need to do? So you probably need to understand why. Why did you set up an LLC to begin? Who set up an LLC first and then converted to an S corp? Oh, that's a lot less. So 1, 2, 3, 4, 5. So the rest of you just created LLCs?
No, I just went to S corp. Well,
Right, that's what I'm saying. You created an S corp at the get-go.
You just said wrong.
yeah.
Yes, yes. Yeah, you guys, I don't know, you weren't working with me then. What were you thinking?
Me?
No, these four right here. This group right here. Okay, so there is a method to our madness when we talk about, and you talk to your attorneys might say something a little bit different than what your tax accountant might say. But I would say you create an LLC and then you convert to an S corp. An S corp is just that. It is a corporation that has a lot of regulations and requirements around it. You have to have annual meetings. You have to have minutes of meetings. Anytime you want to change something, you have to do a resolution, as we've all found. Those are all things you have to do if you have an organized S corp. So if you go on to INDIS, you guys know you have to do those business entity reports and things. That tells you whether you organize as an S corp or organize as an LLC. If you organize as an LLC and flip it into an S corp for tax purposes only, you have gotten rid of all the regulations around a corporation, but you still have the legal liability protection that a corporation has. Do you understand what the legal liability piece of this whole thing is? Good, I'm not talking to anybody who doesn't understand. Everybody understand that? Okay, good. So you would create an LLC and flip it.
So don't you want to at least make 50,000 a year to be a good
Profit.
like to make it worth it?
Yeah, don't you have to make a profit about 50 grand
I
a
was
year
told-
for it to be profitable?
I was told that $50,000 a year was the threshold
payroll and all that.
Boy,
I wasn't told
Did
that
they
too.
tell you what internal revenue code that was in?
So I started as LLC.
Right.
And then when you hit a certain financial threshold, she said now it makes sense to convert.
Makes sense to. It's not a requirement.
No,
There-
No, not a
There is no
requirement, just
requirement.
What it
sensible.
costs to
Exactly,
make it run an
right.
hour.
And why is there a difference in costs? Why do you think there's a difference in cost to run an S corp versus to run an LLC as a
The payroll, right?
separate return, payroll, you've gotta pay somebody to do payroll, you don't wanna sit and do that, well, you could, but you don't want to, right? So it's a cost threshold, it's not a requirement. So you're just looking at, does it make sense if I'm paying 15.3% on my net over here, and my tax accountant's gonna start charging me, let me use a good number.
$134 a month.
$34 a month,
$134.
$134.
$134 a month to do payroll and taxes this way.
Okay. I guess it's fair. In Indianapolis, I get, I'm sorry,
For the S corp.
for the S corp? But that's not to prepare the return.
No,
No,
that's actually,
just to run payroll,
just to
right?
run payroll
Yeah.
and pay my taxes.
That's
I
the
pay taxes
same as
monthly.
mine.
So then you saw the incremental difference, right? They sat with you and said, this is how much self-employment you're gonna pay, you're gonna save that self-employment, so the numbers worked out for you.
Yeah, she said at this point, then the numbers work. When you hit that threshold, then,
But did you see the numbers to know they worked?
yeah, I mean, I'm sure she showed me, but yeah. When
When
somebody says that it's going, yeah.
But mine did the same, I mean, mine did the same
Papers
thing.
right on a desk, I'm sure they said it.
It made total sense.
And it does at the time, right? It's taxes, who cares? Who gives a rip? Until you have to write a check. And then I can tell you, I know that clients give a rip, because I have to be the one to tell them, and they're like, you never said that. Yeah, I did. Again, my points to all of this are more in terms of how you should be communicating with your CPA, okay? Should you know this stuff, or do you really not care? I mean, if you knew you were paying an extra $1,000 a year on either side, would you care?
Yes,
You would, wouldn't you?
I would.
I would too. So I think it's important to know what you're saving and why you're saving it. Do I think there's a $50,000 threshold? I think it depends on the unique situation. Every taxpayer is different, right? It depends on whether you're filing a joint return. It depends on a lot of different factors. You know, where you're organized at. All of those factors are different and unique for every individual person in this room. So I do not think that there is a threshold that you do it. I think you are always looking at it. From my perspective, I don't even say I look at the threshold. I would say I always do the calculation. If an LLC is losing money, I keep them in an LLC. There's no reason not to, okay? I know what my fees are for an S corp return and payroll, and so I look at that and say, if I can get to net neutral, you're gonna save, say, self-employment tax, and we're gonna move to an S corp, because I know your potential of growth is this way, then I'm gonna go ahead and flip you into an S corp. If you start with an S corp, you're already there. There is no analysis.
Sorry, for the brand new people in the room.
Yes.
That are making less than 40K a year, are they, I mean, typically, an LLC sufficient? I think that's what a lot of us were taught, is what we're getting to with this like $50,000.
Yeah,
It just totally depends, you're still gonna say it depends on the person. Even if they have no money coming in,
no other money coming in.
and they're not off the ground in real estate yet.
Okay.
I guess is where I'm at.
Is where you're at.
No, that's not where I'm at.
I mean,
Let's be clear, she does make impact. She is
in
making,
terms of this discussion, Megan, I think what you're asking is, in terms of the discussion, that's what people are asking. So, okay, so do the math, right? So $40,000 times 15%, we start there, okay? and we say that that is probably going to be about $5,200 in total. Am I going to charge $5,200 to do payroll and an S-corp return? Now, keep in mind, hang on, $5,200 is total self-employment tax. So before we get there, before I answer your question, you have to reduce that by the fact that you gotta pay payroll. You have to pay 7.65%, and your company has to still pay 7.65%. You're still paying that, but on what figure? Okay?
Much smaller.
A much,
Reasonable income.
well, it's not, yeah, thank you.
On a
It's not
very
smaller.
reasonable income.
It's much more reasonable.
It's just more like income versus revenue. Yeah.
Can you pay yourself?
Would you say you have not noticed that though?
But,
What did he say for the rest of the room?
so, Trent was asking a legitimate question. Can you pay yourself $20,000 if you're making 40? Can you?
You're not making 40, 20K is going towards legitimate business expenses, and then you're being paid 20,000 for yourself, right?
Yeah, I would say that. I would say that I mean, whether we like it or not, the IRS has their own idea of what reasonable is. They just won't tell us. Until you get audited.
To replace yourself, right?
Yeah, there is, let me see if I can find it for you.
Supposed to replace yourself. So
There you go.
420.
This is the only thing as a CPA with the AICPA Society that we can get from the IRS on what's a reasonable wage. Some factors that have been considered when the tax courts come around and actually try tax courts. Your training and experience. Okay, are you trained and experienced to do this job? You and you alone. Is that what you do? Your duties and responsibilities. Are you running your entity? I would guess so if you're self-employed. Time and effort devoted to the business. Is this what you do 100% of the time? Dividend history. So, your distributions. Have they been remarkably going up as your income's going up and your salary has stayed the same?
Are we in an IPO or what?
I'm sorry?
Potential public offering, how do you get dividends off your own business?
They call them dividends, they're actually distributions.
Okay.
You take them as an S corp owner, okay? You're allowed to take already taxed money as a distribution. If you're a C corp, you take dividends. If you're an S corp, you take distributions. That's a whole nother thing. Payments to non-shareholder employees, that's a consideration if your spouse is employed. Timing and manner of paying bonuses to key people, what comparative businesses pay the similar thing. Compensation agreements, and to use a formula to determine compensation. So this is what the IRS says. They're going to look at you and say, have all of these things been met? Then I would say to you, no, you can't pay yourself $20,000 if you're pulling in 40. No, that's what the IRS would say.
Are we still talking about the S-corp?
Yeah,
I'm confused.
I know, I'm sorry, we have bounced around everywhere. But the S corp is where, the S corp is the tax advantage opportunity here, okay?
I'm not set up as an S-corp.
Okay, so you're paying self-employment, you're a sole proprietor, okay? You're
I'm not
paying,
myself anything, I just
you
will
can't,
pay tax.
you can't,
Okay,
okay? You're self-employed, you can't pay yourself a wage.
okay.
You just take your money out, do what you're gonna do, because all of your income is reported on your 1040, you pay income tax and self-employment tax. You are in that world.
So are your taxes potentially lower if you have W-2 positions as well? Because they're already taking so much of your money based on your W-2 and you're maxed out in your W-2, but you're also paying self-employment tax.
If you get to $147,800 of W-2 income, because then you've maxed out on the FICA piece, and now you don't have to pay the FICA piece anymore. By the way, in 2023, that level is $160,200, yes, before you max out a FICA. So if you have a W-2 that's more than $161,000, then you're in good shape. Because you're not paying FICA tax on that. Everybody else is. So that's why we talk about this tax advantage of flipping into an S Corp, because you pay your, as an S Corp, you are an employee shareholder. You're both. Okay? You pay yourself a wage over here as a W-2. Okay? So you pay that, but that's lower than what you would have paid over here as a sole proprietor. I know.
Can you zoom into that, Becky?
Yep.
And you can use mine as an example, that's fine. To kind of say like, here is an example of a good reasonable salary. If you had $100,000 in gross commission income, you paid yourself 40 grand.
40
whatever
grand,
that number
yeah,
is,
whatever that
and
is.
then you can like actually go down to the math, 60K at 15.3%, this is the savings, here's the cost.
Yes. So, to further that point, let me try to dial in. So over here, you've earned, over here is an LLC. This is our LLC side. You're probably going to pay on the 70 grand of net income that you would have. You're probably gonna pay in total income and self-employment tax probably over $17,000, $18,000 in taxes in total. Okay, over here, as you sit right now. Over here, as an S Corp owner, we flipped it over here. You make your 70,000, okay? You pay yourself a wage of 40,000, 35,000. That's a deduction against that 70. 70,000 was your gross, 35,000 is your deduction, 35,000 is your net. So now you have a W-2 that's 35,000, you have then S Corp income over here that's 35,000, that both goes to your personal return, okay? That's all great. Over here, you paid 70, but you're like, Becky, they're both 70. Yeah, but over here, of that $20,000, $17,000 I was talking about, a good $7 grand is your self-employment tax. Over here in the S Corp world, that's gone. You have paid 7.65% on the 35,000. I'm not going to deny that, okay? Because that's what the IRS says you have to do. You've paid that, but we cut it in half from over here. So yes, you've paid somebody to do some other services, which by the way you can deduct. Still a deduction, okay? All of that's a deduction. But you have cut off that $7,000 of self-employment tax here. So now over here on your return, when you do your 1040, you've got $35,000 of W-2, $35,000 of net income from your S Corp, and then you're just gonna pay income tax. Remember the first slide I said? You're only gonna pay the income tax. That's it on your return, which might equate to, depending upon everything, maybe $10,000 at the most.
So what did they say by, you don't need my words.
I know.
S Corp versus the way that she's set up
Yep.
currently.
Yep.
Same monies, what is the benefit to her?
Probably at least $3 grand a year. A year. Remember, that's not a one-time shot. That's every year based on your growth potential. So at least $3 grand annually on the low side is what you're gonna save. What you're gonna save by flipping it from an, if you're not organized as anything, I'd still say the LLC and flip it. That's what I would say.
Isn't there potential to save quite a bit more than that? Because I think that,
As your income goes up.
like several years ago, I came to
Yep.
Prince Life, blessed him greatly.
You did bless him greatly. We all know he's a different man because of you.
Yes. And so I convinced him to become an S corporation.
You did.
And he doubled his income that year, and he paid the same amount in taxes.
And same amount of taxes with, it was close, but it was about that, yeah.
So how is it like, well, it's only a $3,000 savings here.
I'm on the low side. I'm just,
Because when you make more money, it makes
yeah,
more sense.
I'm saying $3 grand is probably
For the first year.
For the first year of somebody who makes 40 to 70 grand, you're probably saving 3 grand.
But then it's
But
substantial.
Substantially more, and that's every year.
Yeah.
Every year, year after year, and as you grow, that only becomes bigger,
So then,
right?
is it fair to say, this was always my understanding of LLC versus S corp, that an LLC is a limited liability corporation that's giving you like liability protection?
Yeah.
But it's not saving you anything on taxes.
Correct.
And then an S
Same thing as
corporation,
a
that's what you
yeah.
need for some sort
Right.
of, if you wanna save taxes.
Right, an LLC just creates the legal liability protection. It does not do anything for taxes. Correct. It does nothing.
You're wonderful. Considering making you my person, that's a
not
big
why I'm
deal.
here, by the way.
I just want you to know that.
It's not here for that.
You are truly wonderful. There are a lot of people that are like me, but they don't speak up as much, that they need very little information or they get overloaded.
Yeah,
So I'm
true.
gonna ask you this,
Okay,
if you can help the people in the back that
Sure.
are not gonna ask you this.
all right, ask away.
Tell me just a quick little, like, what are the indicators, if you will, for the people in the room, maybe a year or two in the business?
Okay,
When do they need to, what indicators are for them to say, you know what, I need to go talk to a tax person, like, I need to sit down and figure out what's best for me? Because they're not gonna get it in this room today, for the most part. They're gonna hear a lot of different stuff, because it makes sense, would you agree, when you actually let that professional really look at your stuff and kind of gauge that? But what is a good indicator for them to say, hey, you know, it's that time for me to go look at that person? And then my second and hopefully last question would be, when you go S corp, can you go back? So, and what I mean by this, so someone decides, hey, I'm at 40, it's not a big savings, I'm gonna do S corp, but then the next 2 years, they do 35, what is that gonna look like for them? So if you can address those two, I will be done.
okay, great questions.
Thank you.
Thank you for speaking up and asking those questions. From my perspective on this side of the table, I think if you become a 1099 person, you need to go talk to somebody. I'll be frank. That's about as frank as I can be. I think 1099 income is difficult to deal with, and you're gonna hear lots of stuff out on the streets about, oh my gosh. Because honestly, in this day and age, so many places are going to 1099 contract labor. So from my perspective, if you get that 1099, you need to be talking to somebody right away. Even if you just have a consultation with them to understand the dynamics, you need to have an initial discussion with a CPA, with a tax advisor, okay? I would recommend a CPA or someone who's an EA, an EA is also okay. The only reason I say that, I tend to see a lot of stuff that's being said and done and told that from my position as a CPA, I'm like, that isn't good.
If you want to equate that to everybody's room, it's like buying a house using only Zillow.
I think that's fair.
Yeah, I mean, that's.
I'm not saying, there are lots of levels, but just be careful. But I think if you get a 1099, I hope that answers that. If you are a 1099, which everybody in this room is, you need to be talking to somebody right now.
So I talked to a CPA and he said that I don't need to file orders. He said that I would get a voucher and estimate my income and then pay all at once at the end of the year. So, second part. Let me handle
Can you say anything
I
about
said,
this, Trevor?
no, I'm gonna interview another CPA is what I said. But second part, I have the business account set up to save 30% of every dollar that I make, so that I'm planning for paying 30%.
Yeah, and that's fair. Let me answer that in a quick minute, because she had a second question that I want to make sure to address. And if you could,
You don't need, I never even said my name, it's okay. It's Crystal.
Crystal,
But you didn't forget it. I didn't forget it.
She did have a second.
Oh, my second question.
Yes.
I'm so full of myself. I
No,
thought you
it's
wanted to know my
whether you
name.
can undo, yes, I got it.
Yes.
Undo the escort. No,
Go, girl.
no, you cannot, without a tax event.
Okay. You can't go backwards. That's my
You
question,
can,
guys.
no, you can, but it's a tax event. So
Okay.
my point is, when I say a tax event,
Sounds scary.
it sounds scary because it is that. You pay tax when you revert it back.
Okay. Which
Okay?
is why you wanna go see a CPA immediately so they can get to know you,
Right.
your business, and
One sec, or is it based on what we're talking?
It's kind of in this.
Okay,
So like, depending on when you become an S corp,
yes,
how that affects tax years. Like if you revert it back, you have to pay taxes right then, like that would for the next January. Like, I'm just wondering about timing.
yeah, timing would be at whatever effective date the IRS has accepted your S corp rejection. So the IRS accepts or denies everything you do,
Uh-huh.
okay? So at the point that they accept that and they understand that you're reverting back to an LLC, that's your tax year,
Okay.
okay? So if you did it on 12/31 of 2022, you would owe tax in 12/31 of
Okay.
2022.
What if on like 1/1, whatever I do, like if I become an S corp on 1/1, it's still the previous year, the whole 2022.
Yeah.
I'm paying that full
Yeah.
supplement tax, correct?
Right. Yeah, yeah. Correct. You have 45 days from the time that you create your LLC to convert it to an S corp. That's the actual requirement. Okay, I said that. That's the actual requirement. You can do a late filing election of an S election. I'm getting into the weeds here. But you can do a late filing. Talk to your CPA. They can do it, just tell them you need to do a late filing. It's okay. I know it all has to be accepted. Okay, back to your question. Your question gets a little complicated because it's based on individual facts here. If you called me and said, Becky, I'm a 1099 person, I hear from everybody that I have to pay estimated taxes, I'd say, you need to come into me, I need to know how much you're gonna make, I need to project that out, and then I can tell you if you owe estimated taxes. Okay? That's the first side. I wouldn't know that unless I sat down. Let me say this, the first year you become independent and you are a sole proprietor and you've been a W-2, don't take this to court, but you're kind of on a free ride because you've been paying in W-2 wages, okay? So you're on a free ride if you're in your first year. In your second year, you're no longer in a free ride. The IRS looks at, you do pay everybody knows you pay a penalty, right? If you don't pay your estimated tax payments? Some people look at me like, I don't pay them, and I look at their tax return and it's got a penalty in the box, and I'm like, yes you did. They're like, no I didn't. Yeah you did right there. I mean, nobody looks at it. It's understanding the dynamics. There is an estimated tax payment penalty.
That's why.
You should, but it should be based on what you think is your projected income for that year,
Right.
okay?
So as a newbie, it's kind of hard.
As a newbie, it is very difficult, and I would probably, if you're new, 2022 is a new year for you, I'd say 2022 taxes, you get a free ride. You probably won't have an estimated tax payment penalty. You probably could pay it in April. But don't quote me on that because I don't know your facts. But it's possible, okay? So that's possible. Estimated taxes are a whole other realm that nobody wants to talk about. But guys, whether you're an S corp or whether you're a sole proprietor, as you are today, if you have no other withholdings, you have to pay estimated taxes, period. Okay? Unless your S corp withholds enough to cover the whole thing. It's that simple. So, yes, sir.
This is just a comment on human behavior. It's amazing what happens when you act like you are a business owner. And so I think there is a non-financial calculation that comes into play. deciding from day one that you are a business owner and you're going to act like that impacts your behavior in ways that we don't even understand. So I think if in doubt, talk to the tax advisor, set up the S corp,
Right.
because it will impact the way you think about your business.
Yes. Yes, because every single one of you is a business. I mean, and that's how I view you. I'm talking to business owners, so I'm viewing you as a business owner. So thank you for saying that, because that's absolutely 100%. So it's all a lot complicated. There's a lot of factors that go into this. There's a lot of dynamics. There's, so many elements of just the structure. Then there's the elements, and Megan asked me to talk about this, which is kind of, first, what kind of deductions should you be looking at? What should you be thinking about? And I know you can't see it, so I'll just read them off. Business meals, just so you know, the last 2 years, you've been able to take 100% of those based on the COVID rules. Secure Act 2.0 did not extend them. So in the last 2 years, you were able to take 100% because they were trying to get people back to the restaurants. You're back in the world of 50% regardless of what you do, okay? You can track it, you can do whatever you want. We're gonna take 50% of those meals. Work-related travel expenses, all of those are deductible, so you wanted dry cleaning, meals, 50%, hotels, rental cars, airfare, anything related to travel. Work-related car use, oh, the questions I get about cars.
Everything I do is for work.
100%,
Everywhere I go.
everywhere you go. That's me. I make sure. No, the car is a difficult conversation to have. It's hard to justify 100%. Unless the car is staying at your office, you drive another car to your office, you pick it up, and then you go out and you truly only go see clients. Guess what? I don't do that either. But for the most part, I try to be aggressive. We try to take about 75%, of the vehicle and say, that's probably a legitimate number. 25% is at home when the kids around, 75% is the car usage. My mode as an accountant is this. My guys here have heard this too many times. Pigs get fat and hogs get slaughtered. So which way do you want to go? You have a chance to take a lot of deductions. We run Mack trucks through deductions, okay? Just be reasonable about it. Just be reasonable. Be able to sit in front of an IRS agent and say, yes, I did go to Las Vegas. I did lose $50,000 with a client. I was with a client and we lost it, right? Just be reasonable. We all just. I mean, I'm happy to sit with an IRS agent, but I gotta be able to keep a straight face. That's my rule, okay? When I talk to my clients, come on guys, I gotta be able to keep a straight face. Business insurance, home office expenses. Yes, you can take a home office expense.
Wi-Fi
Okay.
and your phone, like 50% of Wi-Fi.
No,
No, that's what I go to where it is.
that's not home office expense. That's just an expense. Your cell phone should all, Google told you that?
They said you're working from home 50% of the time.
Okay, don't Google. Don't Google that stuff. Go get a CPA and talk to them. Home office expenses are your utilities, your internet, your repairs to your house. You have an office. Your office is 120 square feet. Your house is 1,200 square feet. Guess what? It's a percentage of that. All your home expenses go against that percentage. That's a home office deduction. No matter what you Google. Your cell phone is not a home office deduction. Your cell phone is your cell phone. I ran a lot of cell phone expenses through because everybody's on their cell phone now. Everything you do is related to your cell phone. So you have direct costs and indirect costs. Home office is indirect, cell phone is direct, okay? Internet is direct. Those are direct costs.
So are you saying you can deduct the full amount of those? Or are you saying that?
I'm saying if my plan has my my 2 kids and my dad and me on it. I take 1/4 of it, and then I look at that 1/4 and say, you know what? Until about 9 o'clock at night, I'm on my cell phone answering questions. So I probably take 75 to 85% of my cell phone calls. I think it's fair. I think I can show the IRS agent, look, you want to answer all these questions at 10 o'clock at night? Okay? So there's indirect and direct, cell phone is direct, internet is direct. Office supplies, bank fees, business interest. If you, maybe not talking to everybody here in the room, but if you are going to invest in something else, another business, and you take something from a line of credit personally to do that, that interest can be tracked as a business expense. That, I'll just put that out there, okay? That, you guys talk to your CPA, they'll talk to you about it. Depreciation, we all know that. Professional service fees, so you can't deduct my fees or anybody else's. Salaries and benefits, I won't go into it. I-401Ks, SEP IRAs, take advantage. Wife, kids, we can talk about that. Education, retirement contributions, we talked about. Client and employee engagements, and startup expenses. Startup expenses, big thing. You don't realize how much you're dishing out to begin with, and they're like, I didn't keep track of it. That's okay. You can still take it as a deduction, okay? So those are the big buckets. Dues, subscriptions, you know, you've got Adobe on your computer. Well, that's a business expense. I mean, you know, any of those kinds of subscriptions that you pay for, you don't think about, throw them on, that's a business expense. The other thing Megan asks about is, how can you make me happy or your CPA happy? When we give you these kinds of lists, what we want to see is a summary. Here's all my 1099s with my income. This agrees. Here's all my expenses in kind of these major buckets. You give them that, and they are going to love you. They're going to love you. Now, yeah, because I'll lock the door. Now, to say that though, keep in mind, if you get audited, what does the accountant have in their files?
Just that summary.
Who has the actual documentation?
Shoebox.
Do cell phones and that kind of thing need to be paid out of your business accounts or like?
You pay it out of your business account.
Who needs to be on the bill? Me or the business?
Oh, it can be you.
Or like home internet or,
It can be you. That's fine. It can be you. You just have to be careful, right? They're gonna ask you. If it's attached to your home and you get audited, they're gonna ask you, show us how this is 100%, but you can do it. I guess this is, let me just say this, because I've had a lot of questions and I know my folks here just got these huge letters. You are responsible for your tax return. That's why I started out with that whole discussion. I can do a lot of things, but at the end of the day, the IRS agent looks at you, and you're the taxpayer. I can do what I can do. And I'm not gonna throw you under the bus, but some people just don't realize that you're responsible for that tax return. So if you don't know what's on it, let me just suggest through this busy season that you might want to look a little deeper at it. Because I do see accountants say, well, you can take that. Here's $50 here, $100 here. I don't always say that, but these guys know that. I usually say, no. I'm a no person. I say yes sometimes, but just be careful, okay? We're seeing more and more people get audited, just know that. Single member S corps are getting audited at a huge rate now, and it's all based on reasonable wage, so we've already talked about that. So just understand that, okay? It is happening, happening more. It will happen as the IRS gets caught up from whatever rock they've been under for the last 2 years. It is happening. So please make sure you understand that you're responsible for it and you should know what's on that return to the best of your ability.
So what are your tips and best practices for like being responsible, organizing yourself?
Yeah.
Is it QuickBooks? Is it here's my business credit card and my business bank account, everything runs through there? Is it save every receipt? Because
In this day and age, I don't think you need to go to the level of QuickBooks. I think if you have multiple things going on, you should. You could use Quicken, things like that, right? That's another way to help. I always suggest having the business bank account and having the debit card, okay? That is really easy support to pull up.
and that's protection, that suffices. If
That
you
would
don't
suffice,
have-
yeah.
Like a statement would suffice versus every receipt
Right.
corresponds, okay.
I mean,
I saw that.
if you get a nasty agent,
But, okay.
but for the most part, I mean, you've got a business account, you've got the debit, you know, you're gonna have debit receipts on there. I think it's fair. I mean, do I think you should, I mean, in this day and age, you guys can snap pictures, I'm not good at that. But you guys can all snap pictures and attach it to, you know, something, that would be just, that would suffice. Put who you met with this person, snap, done. If you get a little bit more sophisticated, you have payroll, you wanna try to do payroll yourself, you can do QuickBooks. Then you really can integrate all of that. You can put all your receipts in there, you can put everything. You get audited, here you go. So that's what I would say. I would say you start with Excel, get a summarized Excel document. Over here, you have, you know, either your bank statements, all of the support with your debit cards. If you can keep receipts due, it's impossible this day because everything's electronic. So I don't know. That's what I would say. Start with Excel, talk to your CPA about going anything further. Okay? But if you could do that for them, because that's not what people do right now, I get lots of sheets. Yes, ma'am?
So you said in terms of receipts, we don't have to keep every single
I would.
receipt? Okay.
I would
So
snap
I'm
a
also
picture.
shoeboxers, and I'm like,
If
if
you're
you're
brand,
brand,
if you have a,
receipts.
if
If
you
you
have a
have-
business account.
Yeah, if you have a business account, don't, right? I don't think,
Don't save my receipts?
I don't think you need to.
Okay. See, I opened a business account, and
Okay.
then, like, I don't think I.
And then you didn't know what to do with it.
Really, yeah, I was like, I don't know what to do with this, so I just put my taxes away in my savings account. I have a receipt.
Okay, you need to keep your receipts right now
Okay.
until you start using your debit card that's gonna show every transaction that you've ever done. Okay? Your debit card is gonna say you went down to Speedway and, you know,
But for me, I
Yeah.
also have two W-2 positions. that
Okay.
are going in my main account, so it's hard for me to decipher, like, if nothing's coming in my business account for a while, like, I can't use my business card, so then do I have to use my personal account and then keep those receipts even if it was a business expense?
yeah, yes, you do. I mean, you do in that regard because you've melded the worlds,
Okay.
right? So
Worlds are melded.
your worlds are melded.
Yeah.
You need to separate. You are a business. You need to behave like a business related to this opportunity. Okay? You need to be using your business account.
Okay.
Period. Whether you stay the way you are as a sole proprietor, you need to be using your business account. You need to separate those worlds and you need to operate as a business.
Okay.
So what she's saying is, if there's no money in the account, you can't charge it, so what she would,
She just moved.
loan the money or
Yeah,
whatever?
she can fund it. I mean, that's fine.
And then
She can
pull
fund
out.
it. Yeah.
You hear that?
Yep.
You can transfer money.
You
from
transfer
your
money
personal account.
And so
from your
she-
personal account to your business account.
Okay, and then what would, they're just gonna, the IRS will just notice that that money's in my business account, or like, how does that?
It's, you have loaned or contributed the money from your personal account to your business account.
Okay,
That's legitimate.
okay. I feel like I've done a pretty good job of keeping track of all my expenses, it's
Yeah.
they're mushed together and not separated.
You need to
It's-
separate.
It's so much easier when you
Thanks,
back.
Thanks.
Yeah.
So yeah, I just would say separate that world. All right, I've gone over my time, so. Any final questions
you are, I can take your, I got it.
Yeah, Jesslyn would have my information, she'll have it. I'll be honest with you, I'm going through a merger right now, so my world is upside down.
Okay.
But Jesslyn will have it, we'll talk. If you wanna talk, we'll talk. I'm always open to talking, as everybody knows. Anybody can talk to me, okay? Anything else? I'm sorry that went long, I know it was boring, but.
It was helpful. Thank you, Becky.
Thank you.
Yeah.